Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool and Ethereum ecosystems. My name is Wack. Today is May 31st, and today's episode is going to cover the latest DeFi guide for using your rETH. We're going to be talking about version 2 of the Beacon Chain dashboard being hinted at. We're also going to be talking about Arbitrum vote that's gone live and some discussion around that. And we will be talking about Vitalik's new post about the Bitcoin block size wars. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so we're going to start today's episode with this update from Regex Buster, who has posted to stakerocketpool.eth saying, PancakeSwap is our current highest APR on the Rocket Pool risk optimized DeFi sheet. The API is just over 20% and marks the third update in a row that PancakeSwap is a top earning protocol. So this 20% number has actually been going, it was actually higher than 20% even just a few weeks ago. I think it was up to maybe like 30 or 40% at one point. So if you had your rETH, with ETH in this pool for the last 6 weeks, you would have earned like 3% on your yield, no less than that, 1.5% on your rewards, which is absolutely phenomenal. Like that is way higher than staking rewards. It's really great that it's been going so consistently. And then in the thread they show some more opportunities. So Balancer you can still get 11%, and then on PancakeSwap, the 20% that we said already, and then there's more as well. So if you have a look at the actual full sheet, here you can see that there is a whole lot of really cool ways of getting yield on your rETH, but PancakeSwap definitely is the one that has been the go-to for the last few weeks, and it is one of those that has incentives from the IMC and also has incentives from the PancakeSwap team. So that is really cool to see. So check it out. And of course, as always, DeFi is risky. Be careful with what you put into any DeFi protocol. You could lose all of it. And I have not used any of these. I don't yield farm rETH myself, so I can't give you an endorsement of any of these. Of course not. It's your own risk. Okay, next going to Twitter and onto some staking news. So Butter here from Beacon Chain says, my feeling when I want to leak the new version 2 validator dashboard of Beacon Chain, but I'm not allowed to. So for those of you who don't know, validators use the Beacon Chain website to track their validators. It's a really great, wonderful website where they have information about your validators being online, offline, proposals, sync committees, all the different kind of rewards you can get. They have an effectiveness number that people like or don't like. Also, they send you notifications on their app, also to your email, if you are missing attestations, so you can take action to get your validators back online. And I'm really excited to see their new version 2 validator dashboard, because their first version of their dashboard has been around since basically the Beacon Chain went live. So it's a few years old now, and I think their competitors are using some really cool data technology and visualization techniques to get information across. So Beacon Chain version 2 coming up should be a really nice thing to see. I'm excited to use it. Like I said, I'm someone who checks the Beacon Chain website pretty much every day, so it's really awesome. Okay, I have some more correction from yesterday's episode. So in yesterday's episode, I talked about NodeSet sending out a questionnaire and saying about how there might be some hidden alpha in there, because I said, one of the questions was, how would you like to be paid for NodeSet services? And the answer was would you like to get protocol points? Would you like to get protocol tokens? Would you like to get ETH and stable coins? And so those were some of the questions. And I was kind of making an inference that maybe it was NodeSet who might start giving out points or tokens, and being pretty excited about that, because I would love a NodeSet airdrop. Anyway, Nick, who is one of the co-founders of NodeSet, sent me a message saying, small point of clarification for today's Rocket Fuel, we are not implementing any kinds of point system. It would be points awarded by the partner programs. And he says that goes for tokens too. It would be token emissions or airdrops from the partner protocols versus not NodeSet tokens, basically. So he was clarifying that. I'm still going to go out there and say that we probably will see tokens at some point. I replied to Nick saying, that makes sense. I see what you mean now. Well, you guys need points and tokens. Gotta build hype for Constellation. And Constellation, of course, is the integration with Rocket Pool, which I talked about in the yesterday's episode. So I'm excited about NodeSet. I've been selected to be a NodeSet node operator, and any of you can be a NodeSet node operator as well if you have 6 months of validating experience at 95% or higher of rated.network effectiveness. So yeah, definitely check out NodeSet. It's going to be a really great opportunity for node operators to make a whole lot of money. And it really looks like they're developing into some cool ideas with like layer 2 stuff and ZK stuff. So and maybe AI stuff as well. So that's really exciting. So thanks, Nick, for clarifying that. Okay, Peter Swoon from Obol team, home validator here, came into the Rocket Pool Discord and dropped an ad for a job posting and said, I'm not sure the best place to share this, but since Obol and Rocket Pool are friends, I wanted to make sure the community had first dibs on applications to this job. As if you're interested in helping to onboard more home stakers with Rocket Pool or any other to Ethereum, please apply. And there's a job for a staking community manager. And Pateris here had 2 good questions, saying what is competitive compensation and what is generous time off. So, job listings like to use these terms in an ambiguous way when it would be better for everyone if they were just more direct. Well, let's have a look what it says on the actual Obol website. And they said here, Obol is like the distributed validator technology. They want more staking to come online. They give information about their network and sustainable goals. So here the responsibilities like serve as the lead community educator, ideal time zone from -5 GMT to +3 GMT. And they said, yeah, you're going to oversee the Discord community moderation, offer second line technical support to the community that the AI bot and moderators cannot manage. Manage the ambassador program, including onboarding, training, and guiding ambassadors to success. Brainstorm, plan, organize, and execute diverse projects and programs to improve the community and grow community staking. This is the kind of job that I would have been all over a few years ago. And because some of this work is work that I've done before in like Web 2 settings. Obviously, now Rocket Fuel is my job, but I think this would actually be something that is really great for the non-technical among us, because obviously there are a lot of technical jobs that come up with development, etc., front end, back end, smart contract, all that stuff. However, when it comes to non-technical jobs, I feel like a lot of people in the crypto community who would love a crypto job, don't have those technical skills. So when something like this comes up, it's nice to give it a shout. So like they said, the benefits are competitive compensation, generous time, paid time off, annual off-site to meet all the team, budget for equipment, and budget for training and education. So this, like I said, is a remote job. If you're interested in it, you can apply for it. Okay, moving on now. We've got some more staking news here, and this time it comes from Blockscape. And Blockscape are a Lido node operator. They said, we're proud to announce that we're now 100% geth free on Lido Finance. And then there's more research. So this is actually really great that Blockscape have gone geth free. They've got some screenshots here about moving away from geth, and that's really cool. So let's have a look at client diversity and see what the impact has been. And as of the latest number on client diversity, we are now 55% geth, 28% of mine, 14% Myso, 3% Aragon, and 0% other. I think rETH will start growing in those charts soon once they go mainnet live. I think a very, very small number of people are using it right now, but geth is getting closer and closer to that below 50% zone, which is, the yellow zone, like the warning zone, compared to where it was just a few months ago. This has been absolutely wonderful to see that number inch further and further down. So 55%, we don't know if this is exactly the right number because the error bars are quite big. However, it's more likely than not now that geth is below 66%, and that is really great to see. So I'm really happy to give shout outs to these teams when they move away from geth, especially when they've got a big amount of stake that they're managing, like Blockscape do. So yeah, kudos to you, Blockscape. Well done. Okay, moving on to some Ethereum news now. So Anthony Sassano is not recording an episode of the Refuel today. So I'm covering some Ethereum news to help you guys tide over for the weekend. So here, I'm going to cover this vote from Arbitrum first, and this is a vote that's happening on the Arbitrum ecosystem, and they have a vote to catalyze gaming ecosystem growth on Arbitrum. Now, this vote is to about $250 million that will be paid over the course of 3 years, going to, it says this proposal was completed after the, so what changes? Nothing changes. The Gaming Catalyst program is designed to immediately expand awareness and adoption of Arbitrum Orbit Stylus by builders and players in the gaming community. Arbitrum has emerged as a leader in the competitive network race through dynamic formula of innovation, robust technology, organic builders, and a variety of short or long-term incentives. So this game, what they're trying to do here is build a partnership with gaming ecosystem and putting $250 million towards that over the course of the next few 3 years. Now, this vote isn't quite as one-sided as people think, and there's a whole lot of discussion going on at the moment. So as you can see, it's about 77% yes, and 82% yes and 17% against. The vote has reached quorum, so as it stands, it will pass. However, people have taken to Twitter to kind of talk about it. So here we have Lito.eth saying, I just voted no on the proposal to fund gaming projects on Arbitrum with 225 million ARB tokens over the next 3 years. I think doubling down on gaming makes a lot of sense for Arbitrum, but I'm not a fan of funding a working group with so much money up front. I would prefer if funding was for 1 year and 1/3 the amount, and having the GCP group apply for new funding after. This way the community can ensure it's getting a good return on investment on the good ROI on the investment. So this actually started a whole bunch of discussion as well. So Carl here says, I've been iffy about this proposal for a while. A few other ecosystems are funding massive gaming funds like Starknet and Polygon. So competing with them over a period of 3 years is justifiable. However, gaming is also a use case that onboards normal folks, not just gamblers. And then he says 225 million ARB tokens is a hard ask. It's a huge amount of capital. And he says at that point, we may as well buy an established gacha game studio that already has the monetization strategies that might fit in well with crypto. And then it goes on to explain their thoughts more. One of the things that we have to realize is that crypto gaming is being put forward as one of the big narratives of this bull market that we're in now, over the and coming in the next year. There's this idea that a whole lot of people will be getting into crypto through gaming, and that there's a whole lot of money to be made in gaming. In 2021 is when the first idea of crypto games really took off, and there was Axie Infinity and Illuvium, and there was a whole lot of hype behind them, but the substance wasn't very good. And I think at that point what happened was a whole bunch of producers started making good quality games to make them into crypto games. And these have been in development over the last couple of years. And I think there's this idea that in the next few months, in the next year or so, we're going to start seeing those games being released and come onto the market. And they'll come onto the market in a way that people will want to play them, they'll want to use them. In many cases, people won't even know that they are crypto games, because things like Immutable X are, they're going to be abstracting away a lot of the crypto parts of it. So people will get the benefits of crypto without having to fully understand crypto or do wallet management, any of that kind of stuff. Immutable X is doing a passport that they're doing, Immutable Passport. So these are the kind of things I think that a lot of people are expecting to be the catalysts, one or some of the catalysts of the next bull market. And it kind of makes sense to me that Arbitrum want to get a foothold in this. Although I sold my ARB tokens a few months ago, and I'm not really involved in ARB governance anymore. But it seems like this vote isn't quite as straightforward as some other votes, even though it's almost definitely going to pass. And 0x not going to make it here. Really brought this home, saying just calculated it, and blockchain gamings have raised $4.23 billion to date. So that just tells you about how huge an industry people think this will be, because they've thrown so much money at it. You just need a handful of games to get successful. Out of 100 games being developed, you just need 2, 3, maybe 5 of them to get use, and that will more than pay for itself. If you look at things like Fortnite or GTA, their online games with their GTA 5, etc. They've got millions of millions and millions of players every day, and those, if crypto can get a couple of those games, there's going to be billions of dollars worth of money coming into crypto because of this. So I can see why they want to do it. I'll leave it up to the Arbitrum people to kind of arguing out about the amounts of money and stuff, but it looks like that's going to be one of the big narratives going forward. Okay, so Vitalik had a blog post a while ago about inclusion lists and encrypted mempools and how they work together. And we got a response to that from Shutter here. Shutter Network put together this article that I think might be worth your time to read it. They said, welcome to our two-part series addressing recent discussions about the future of Ethereum, and people like Vitalik and Peter and Dankrad got involved with this. So they said in part one, we discussed the vital role of encrypted mempools in bolstering sensitive resistance and mitigating malicious MEV activities. That in part two now we'll dive into how inclusion lists and encrypted mempools enabled by Shutter can synergistically create a healthier transaction environment. We'll outline the strengths and limitations of each approach, demonstrating how they complement each other. So if you want to learn about encrypted mempools and also about inclusion lists and how they all work together, then definitely check out these two articles. I think this is like an avenue that is going to get really popular, like either for the Osaka hard fork, maybe basically, like, so the next one of course is Pectra, and then the one after that will be Osaka or some variation of that name. I think it's F star. So F star, Osaka and F star. So that I think will be the update where some of this stuff gets like brought into the chain. So if you want to start getting involved in the discussions and the ideas right now, you can start learning about it, and I think it's really worth your time to get this information. Okay, I'm going to talk about Myso Finance, and I've covered them quite a few times. They're a really small protocol, and they've got really good relationships with Rocket Pool, so that's why I've talked about them so much. So if you're just watching this for the Ethereum thing, you might never have heard of Myso Finance. The reason for covering them today is because they actually had a really novel fundraising technique for their token launch, which was called initial option offering. So you could basically you could deposit your crypto into their platform and take a loan of their token. I think it's MNT token. And what would happen is if the price of the MNT went up, you could just like default on your loan and keep their token. But if the price went down, then you could repay your loan, like give back the tokens and like get back your collateral. So it's a really nice really nice system that they've come up with. I'd love to see more protocols trying this. So they got listed on gate.io, and then they also the token started trading, but it looks like the price of the token went down. So MYT, the Myso Finance token, so it looks like the price went down. So people in the Rocket Pool community here, like Jasper, he says, I just repaid my loan. So he, I don't know if he deposited rETH to mint the MYT token, but then because the price went down, 35% from launch, he then gave back the MYT tokens that he had minted and got his rETH back. So it's a really cool idea, and I think that there's we potentially might be seeing more of this. I think that I was personally trying to get involved in this, but I just didn't do it because I'm lazy, I guess. But it was something I just kept putting further and further off. But it's something I'm definitely going to look into in the future for doing this if other protocols are doing this, because it's pretty much like a risk-free way of getting exposure to potentially upside on some of these tokens, which is really cool to see. So of course, as always, not financial advice and any of that stuff. Okay, so we talked about Taiko a few days ago about how they were launching their token and they were launching on mainnet, and there's some really exciting stuff happening around Taiko. Well, one of the really cool things that they did was actually they made a commitment to the Protocol Guild a few months ago, saying that they will pledge 1% of their token, once they had their token generation event, to go to the Protocol Guild. Well, they actually followed through with that. So Protocol Guild here put out a tweet saying a few months ago, Taiko became the first layer 2 to commit to the 1% Protocol Guild pledge. And today, 10 million Taiko has been sent. Thank you for supporting our common stewardship. This will vest over 4 years. The protocol gives membership of 170 layer 1 maintainers. So this is absolutely fantastic. Like, really, really great job from Taiko. As I covered on the show last week, that Taiko is like this idea that, they've got base rollup and it's really exciting technology. Well, sadly, like, it's not launching with the full spec that we want, for decentralization. They've still got some red sections here with state validation, exit window, sequencer failure. So this is something that, hopefully they'll get to go to green very soon. But they're still at stage 0. I think myself and I think some others as well were under the impression that when they launched, they were going to be at stage 1 at launch, or maybe even stage 2 very quickly. But that I think is going to take 2 years in terms of their roadmap. So we'll definitely be keeping a close eye on Taiko. Now, speaking of stage 2 rollups, Fuel here, let me actually show you, is the only rollup on L2B that is fully green. So they have state validation, data availability, exit window, proposal failure, and sequencer failure is all covered. It's all green. It's all decentralized. It's stage 2. The only problem with Fuel, and the reason why you might never have heard of it, is it only has like less than $1,000 of TVL. It's not something that people are using. Well, that's because they've got updates coming. They've got a lot of development that's happening. And here there is a post from Fuel saying, "Good morning. We're excited to announce the launch of our final public testnet on the Sepolia network, powered by the Fuel rollup operating system. After years of research, we now invite everyone to join us in building the future of Ethereum rollups." So maybe you can get involved on testnet on Sepolia with working with Fuel if you want. I'm sure there might be some airdrop or something for you in that. So they said, in 2020, Fuel had launched Fuel version 1, the first true optimistic rollup to solve Ethereum scalability. And then said this testnet release marks the final milestone in our path to mainnet. So this is exciting. I'm hoping that they'll be launching with everything green as well. And maybe, there's this idea of hopefully within the next 12 months, we should have some stage 2 rollups, which would be absolutely wonderful to see. Sadly, we're not there just yet. Okay, talking about rollups a little bit more, Jesse Polak here from Base. He, I think, is the CEO of Base Development, or lead developer. He has said that Base now have increased their execution target, gas target, from 6.25 megagas to 7.5 megagas. So this is a 20% increase in capacity, and there was no need for any kind of hard fork or anything like that. It just happened on the Base side. It's nice and easy, and they said that they're going to monitor for a few weeks before they increase again. Their goal, of course, is to go to 1 gigagas. This is the kind of thing that I think a lot of layer 2s are going to be optimizing for, where there's two parts of the gas fee, or the fee that you pay on layer 2s. The first part is the cost of execution, which is, of course, on the layer 2, and then the second part is the cost of data, which is through blobs on Ethereum layer 1. Now, the blobs are still not full, so that's free at the moment. However, with the execution costs, when these chains get busy, there's costs that start creeping into it. So what Base are doing is they're increasing their gas capacity slowly but surely. Like every few weeks, they're dialing it up a notch. And if they keep doing that, all the way up to 1 gigagas, which is 133x from where they are now, that the capacity that will allow will just be mind-boggling. But it's not just Base doing this; it's just Base are really out in the open doing this. Arbitrum and the OP mainnet, like all of these guys, the different teams are optimizing for this as well. The execution efficiency and block sizes, basically, I guess. Their local processing power. So this is really, really cool to see. And I think what's going to happen is, actually, let's just have a quick look at L2 fees. The fees are just looking fantastic, right? Like, so no one, I think, would have imagined that you'd still see sub 1 cent fees on Optimism, Base, Arbitrum, even ZK Sync era. Like this, these are just fantastic to see this, and I think it's just going to get better and better. So wonderful, great stuff, guys. I'm going to finish today's episode with this article from Vitalik, and Vitalik says some reflections on the Bitcoin block size war. So he read, he listened to 2 books recently, The Block Size War by Jonathan Beer, and Hijacking Bitcoin, The Hidden Story of BTC by Roger Ver with Steve Patterson. So Vitalik says that, he listened to these 2 books, and the interesting things are that they tell the history of the same situation, but from 2 different perspectives. One from the side of the big blockers, the people who then later became Bitcoin Cash. They wanted to increase the block size to continue BTC's use as peer-to-peer currency, and the small blockers who kind of went towards this store of value narrative. So Vitalik says it's fascinating to read these 2 histories of an event that I personally lived through and even to some extent participated in. But anyway, so what they're doing is Vitalik kind of goes through the story and kind of gives his own perspective on what he saw at the time and what these people are arguing and their perspectives, and he gives a really nice summary of what was happening at that time. So if you aren't aware of what happened during the block size wars, I think it's really interesting. It's like between 2016 and 2017, basically this was huge discussion that went on with Bitcoin about whether you should have a hard fork to change the block size. And eventually, the Bitcoin community decided to keep small blocks, which then led to the fork and Bitcoin Cash being founded. And Roger Ver, of course, was one of the early huge supporters of Bitcoin Cash. So you can read Vitalik's article where he goes into some details about this. There are a couple of things I want to bring up. One of them is this post by Emmanuel, and he says it's worth pointing out that we might be entering an era of extreme small block philosophy on Ethereum too. He says this idea like ossify layer 1 and don't touch it for any reason. So I get that we're doing the Rolex-centric roadmap, but there are probably many things we could build on layer 1 to make certain off-chain infrastructure, including specific layer 2s, unnecessary. And he says, but we have the same VC-backed companies, investors who profit from investing in off-chain infrastructure here in Ethereum as well. So there's a lot of demand to ossify layer 1 and constrain it to the minimum functionality required for escape velocity. So you can definitely engage with this argument a little bit more. Emmanuel Owosika has been sharing this opinion a lot recently about how there's this drive to ossify Ethereum layer 1, and we shouldn't be doing it. We should be scaling layer 1s and layer 2s at the same time, and layer 1s should take priority over layer 2s. And so be it if layer 2s don't succeed, right? Because layer 1 just kind of did it all. It's a very interesting perspective. And Jasper here shared the article with the Rocket Pool community saying, great read. He pulls out these couple of paragraphs saying, the block size war as a one-sided competence trap. The combined picture that I get from reading through these 2 books is a political tragedy that I feel I have seen over and over again in all kinds of contexts, including cryptocurrencies, corporations, and national politics. It says one side monopolizes all the competent people, but uses its power to push a narrow and biased perspective. The other side correctly recognizes that something is wrong, but engulfs itself in a focus on opposition, failing to develop the technical ability to execute on its own. And Jasper says, I haven't seen this play out here or anything, right? I think what Jasper's referring to is, a couple of the big discussions that have happened in the Rocket Pool community. And one of those was scaling our RPL collateral with node operator ETH or with protocol ETH. And another thing, of course, is the discussion that's happening around tokenomics changes that are taking place right now. So I'll let you dig into these comments more and argue with Jasper, but it definitely presents an interesting framing with these thoughts and ideas. So on that note, thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you have a lovely weekend ahead, and I will see you all on Monday. Bye.